Yo, ladies and gentlemen, what is going on? Welcome back. It's Wednesday. I hope you all had a fantastic session, although it was pretty muted and sideways and roller coaster, up and down, sideways, whatever it is. So before we dive into the video, I'd like to share a story with you about yesterday and the reason why I could not upload a video. So as I was recording it, my mic completely went dead, okay? And I could not figure out what it was until I kind of told myself, hey man, like this thing is not working, it's dead, it's too late to go get a new one, and so give up. So that I did. So I do apologize. I went this morning to Best Buy and got me a nice little snowball, whatever these things are called. I'm looking at it right now. Mike. So here we are, back in action. So sorry for that. Thank you for your patience, and we're back, baby. We're back. All right, now. At the worst time possible, this thing had to happen because yesterday was a critical day. Yesterday was the day that we were actually looking for, right? We were still trading underneath the 50-day moving average, which on Monday, I was telling you guys, this is not a good thing. I don't like the fact that the SPY is hovering just underneath it. And sure enough, the following day, bam, we dropped. Okay, we gapped down, and now it appears that the wave pattern that is suggesting for the lows, okay, is at play now. So, we took a trade last week in SPY, anticipating a move to the upside with very little risk on it. Okay, we did not go heavy, and as a good trader, you have to accept your losses and you have to accept when you're wrong. And I was wrong, so I moved on. Okay, closed my trade, took the loss, small loss, relatively speaking, and now we're looking for what could be the next trade to the downside, okay, because that is what the charts are telling us. So let's review. Let's take a look at what's going to happen or what could happen. All right, for now, I've been telling you guys the 50-day simple moving average is a level to be looking for, all right, to keep your eyes open to, because as you can clearly see, for the past 3 days, it was acting as resistance. The Qs held above it just slightly, but lost it, and then the bears took over and dropped the ball. Okay, we broke below the September 20th low. The SMH also lost, and then we dropped below the 50-day. We now we closed. The candle was acting as resistance there, rather. IWM is holding for dear life, and the Dow is rejecting the 50-day and moving on lower. So the truth of the matter is, because the Qs broke below its previous low, it is indicating to me that the SPY will follow or could follow, and also with more conviction and more evidence based on what the Elliott wave count is suggesting. So before I dive into the video, let me brainwash you just a bit, okay? Thank you to those who are new to the channel. Thank you for coming in. Thank you for tuning in today. Give me a thumbs up on this video if you're enjoying the content. Subscribe to the channel, and also don't forget to click on that bell notification icon so you'll be notified when I upload these videos. As an alternative, if you want everyday Elliott wave analysis for any of your charts, and you want to see how we manage and how we analyze these markets, hop on over to Trending Waves. The link to my Discord group is pinned down in the comments section. Totally free to join. Obviously, it's for a period amount of time, and once you join, you will take it from there. We'll send you the details. All right. So the SPY is, let me actually go down to 30-minute time frame, and let's turn off these moving averages and turn on the labels. And what we're looking for here is that, let's review real quick what has transpired. So from September the 2nd high, right? We topped out at 454 something, right? We then went down in 1, up in 2. But an impulsive structure down into the wave 3. ABC pulled back into the wave 4, which did not break any invalidation or any guidelines, as the wave 1 is above the wave 4. Wave 4 did not go into the territory of wave 1. We then sold off into the wave 5. I am viewing this as an impulsive structure to the downside in the wave A. Okay, we are now then bouncing up in A, down in B, up in C to complete the intermediate wave degree B of this higher degree. Now, I have outlined here a orangey reddish trend line, okay, which originated on September 9th, confirmed to be resistance September 16th, rejected 23rd, rejected the 27th, rejected again that same day, and then we failed to break above it. Now, as you can see here, the wave B was a clear resistance, clear fib 618 golden pocket fib level resistance retracement of wave A. Okay, again, this is a level which we were looking for. All right, the signs were there that things were about to get ugly. Resistance, resistance. Okay, previous price action resistance also. So given that the 618 was an actual resistance, again, a retracement. If you want to know how I got the retracement tool, come down here, look for your retracement tools, take it from the high to the low, all right? And then right there, you turn on your 618 and bam, you got it right there. Pure resistance, magical. So once we hit that wave, right, we then sold off, and now we're looking for the downside. So wave C should have 5 substructures. So this is what we're labeling it as. So down in 1, up in 2, 3, we're looking for the wave 4 pullback, okay, to meet resistance at the, between the between the 38.2 and the 23.6% retracement of wave 2 versus wave 3, and then we're going to look for a measure move down to the wave 5 of wave 1, which should take us down towards ideally 425 to break the low, okay, of wave A. So I told the team that I want to be able to see a bit of consolidation coming into today, and we have, right? We held these levels that I outlined to you guys, and that potentially we were going to take a trade. Okay, I am pausing my vehicle okay, on taking any trades right now, because the bigger opportunity will come, and this is where, okay, reason why I don't want to take a trade here is because we are literally sandwiched between the previous low, September 20th, and wave count invalidation. Okay, you're technically in the middle, so that level of risk here is not favoring what we would like as a reward, because technically speaking, we have very little room for any price action to take advantage of. And remember, wave 5s could always truncate. Okay, they could always truncate, just like they did somewhere here. All right, so wave 4, then we get the pullback. So here's where I would like to wait for. I want to see price action retest this trend line as resistance. Okay, that'll be my wave 2. I want to see up in A, down in C, up in A, down in B, up in C, into a measure move and a resistance, okay, as I have labeled here. At which point, guys, that is where I would like to take the trade. Because if I know that we're going to start breaking above this trend line, okay, if we get near it, I know that it is my stop to the downside, right? If we break above it. Rather than here, we have all this room left to go, okay? We have about roughly almost shy of 1%. Okay, that is not ideal. I don't think that's ideal based on my book, all right, and how I trade. So I want to be patient and wait for this to bottom here, break the low, pull back 3 waves, test this trend line, and down we go. Obviously, once we see the wave 1 complete, once we see this 5-wave progression complete, we then can take a fib level, which will add more to our conviction, right? Let's say, for instance, this was the high of wave 1, or the start, down to here. I'm just hypothetically doing this, guys. This is not where it will end. I don't know where it will end. All right. We want to measure move, right? We want to see that at the very least, the 38.2 and the 50% retracement come in. Okay. Somewhere here in this zone is where I would like to take this trade. It may go on higher. This wave 1 can go up. I don't know. So that's the idea why I'm showing you this is because I want you to know where my mind is at. Okay. And so once we get those confirmations is where I would like to take that trade. All right, guys. So once again, we are holding resistance as we expected it on the wave 4, 38.2, 23.6, and down we go. Over to the Qs on the bearish count, suggesting the similar interpretation. Same trend line resistance off the high September 2nd. Okay, we went down to the wave A, B, C to the pullback of wave B, 618% retracement, resistance from the trend line generated on September 9th, rejected here September 16th, rejected here on the 23rd, on the 27th, and then we sold off. All right, now what we're looking for here is that, again, similar situation, although the Qs are displaying a bit more of an aggressive price action, and that is because of the 10-year situation that is rising again. Okay, you start to see these things like the Evergrande thing. Nobody's talking about it anymore. That thing is like underneath the desk or underneath the couch, whatever the term is. All right, now is the yields, now is this, now is that. So sometimes being very, like, listen to the news, of course. Fundamentals are super important. I'm not knocking that out. Fundamentals, economic news, all that stuff are great to understand and know and have knowledge for. All right, but ultimately is the patterns that the market displays, the hints that the Elliott wave analysis shows us, that we ultimately have to take advantage of and prioritize to understand where the possibilities of a direction move is going to take us. All right, so now as the yields, like back in February, March, I think it was, of last year, all right, the yields started rising again and tech sold off heavily. Inflation was blah 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 and tech sold off. So whatever, it's important. Again, I'm not knocking that out. It's good to know these things. Anyway, so down in 3, 200% extension of wave 1 versus wave 2. We retrace back to the wave 4 between the 38.2 and the 23.6. Now we're looking to do 1, 2, down in 3, 4, 5 to complete the wave 1. Now this is yet to be finished or determine where it'll land. Maybe it'll be down in this trend line, which, if you remember, I did review this trend line. I'm gonna go quickly to the 4-hour time frame and I'll show you where that originated from. Okay, that trend line originated back here on September the 18th of 2020 from the low of wave 4. Okay, it was confirmed here on November the 3rd, the 2nd, rejected or held support rather on March the 5th, held support on May the 13th, and now we may retest that line again. That same line is here. Excuse me, let me organize this. That same line is here, which falls in line right between the 100% extension of wave A versus wave B to give you wave C. To give you wave C. All right, so that's what we're looking for. It's getting a little bit more clear. You could either wait for this whole mess to unfold, not trying to catch any falling knives or any trades because you're feeling that you're missing out. But what you can ultimately do is wait to see how this whole thing unfolds, find some good levels of support. Okay, I have this line here that shows that this zone was clear support and is trying to fight it and hold it. Ultimately is not. So maybe when we possibly retest this bottom trend line that you see is of importance, is where you could take opportunities for long trades. Okay, because at that point there will be pretty good discounts. Okay, or we wait for the 100% extension or the 1618. All right, guys. So again, just waiting for this thing to unfold to then see a 3-wave retracement to resistance and then take advantages of the wave 3 of wave C. Pretty simple, guys. Pretty simple, straightforward game plan coming into the rest of the week and the next. All right, guys. So again, sorry for yesterday. I know yesterday it was pretty important for us to review, but here we are today. What happened yesterday happened yesterday, and we're here today. So thank you so much for tuning in. Love you all. Take care and subscribe to the channel. Join Trending Waves. Link will be pinned down in the comments. All right. Peace out.